The Q2 earnings of L&T Infotech hint at early signs of revival. In almost all key areas, there were improvements, although the issues with the top BFS client is not over yet. Let's do a three-point analysis to really understand the earnings fine print and also the outlook on the company. 1. What were the key positives in Q2 earnings? Well, revenue showed early signs of a pickup during the quarter. Revenue stood at $363 million, now showing a sequential growth of 2%. Now, the quarter-on-quarter growth in constant currency at 2.4% also was an improvement over the previous 2 quarters. The sequential growth in digital in reported currency is at 6%, which was much faster than the company's average, and also digital forms close to 40% of the total revenue. Now, albeit its issues with the key clients and 2 consecutive soft quarters prior to the quarter under review, the management is quite confident of clocking in double-digit growth for the full year. Now, in terms of verticals, the performance of manufacturing as well as energy and utility, they were robust. Now, in terms of geographies, Europe and the rest of the world also did well. It was a good quarter from the deal win perspective as well, with the company bagging $100 million worth large deals, one in each in North America, Europe and Asia. Now, client additions were also healthy, with 1 new client in the $50 million bucket and 13 new in the $1 million bucket as well. 2. What were the key negatives in Q2 earnings? Well, the company saw a 50 basis points sequential decline in margins. While annual wage hike and lower utilization were drags, those were offset by lower visa costs and some currency tailwind as well as lower expenses. Now, there was a sequential drop in utilization rate from 81.3% to 80.6%. Attrition continues to remain at an elevated level of 18.4%. Now, in terms of verticals, BFS as a vertical did not show any growth in the quarter, as it was impacted by transient weakness in 2 key accounts, financial services client in the US and South Africa. Now, weakness was also seen in high-tech, media and entertainment industries as well. 3. What's the outlook on the company? Well, the stock had underperformed in the past 6 months on the back of concerns that its balance sheet might be used to fund the stake purchase in the rival Mindtree, followed by a softer Q4 and Q1 on account of weakness in the key accounts. However, we are positive about the company coming out gradually from this rough patch, and also the current quarter gives an early indication of that. Now, Moneycontrol Research recommends adding the stock on every weakness.